Today's class will discuss three things. First, as an accountant, what you need to know regarding computation of income, chapter 60 deductions, and what is the role of tax software for preparation of tax return and uploading of tax return. In computation of income, we know we have the 5 heads of income. That is income from salary, income from house property, income from PGBP, income from capital gains, income from other sources. PGBP is basically your profits and gains from business and profession. So when we add these 5 heads of income, we will get the gross total income. And from this gross total income, we are required to make some deduction under chapter 6a. Now under chapter 6a there are numerous deductions, but as an accountant you need to be aware of most frequently used provisions, which is basically section 80C, 80D and 80G. So these 3 provisions you need to know: which investment is eligible for 80C deductions, which expenses is eligible for 80D deduction, what donation eligible for 80G deductions, what will be their limit. All these things we need to understand here. So once we will do these deductions from the gross total income, we will make the deduction, we will get the total income. And this total income we have to apply the tax rate to get the tax liability. In tax software, what you need to do, you need to make some data entry in this tax software. The tax software will do the computations. But if you want to make the data entry, then software will ask you certain information in certain fields, and you will not be able to put the correct information there unless you know the computation of income under all the 5 heads as per the Income Tax Act. If you have a sufficient knowledge on computation of income, only then you can put the data entry in the correct field asked by the software. Thereafter, software will compute the income, and after computation of income, they will compute the tax. If you have any tax liability to discharge, again you have to intervene with the software. So software will take you to your bank portal. From that bank portal, you have to create the challan and you have to discharge your tax liability under the respective sections. Once you discharge this liability, then software will prepare the return and upload the return. Let's see for computation of income, what are the heads of income and what are the provisions you need to know for computation of income. So the provisions which you need to know for income from salary, this is the first heads of income. Which chapter 4A of the Income Tax Act, you will get the entire informations. And what are the sections? Section 15 to section 17. Charging section, section 15. So you need to read chapter 6A, 15 to 17 of Income Tax Act. Only then you will be able to compute income under the head salary. Similarly, for computation of income under the head house property, you have to read chapter 4C, and relevant section is section 22 to 27. Charging section is section 22. Similarly, for profits and gains of business professions, which is very important as an accountant, because you are preparing the profit and loss accounts and balance sheet of the company, you need to read very thoroughly chapter 4D of the Income Tax Act, and also should have the sufficient knowledge in section 28 to section 44D. And the charging section for income from business profession is section 28. Similarly, for capital gain, you need to read chapter 4E of the Income Tax Act and relevant section 45 to 55A, and charging section is 45 and 46 too. For income from other sources, you have to read chapter 4F, section 56 to 59, and charging section is 56. So once you will read all these sections, then you will be able to compute the income under the head income from salary, house property, PGBB, income from capital gains, income from other sources, to arrive at the gross total income. After gross total income, you have to do the chapter 6A deduction. So first deduction is the 80C. In 80C, you are entitled to get the deductions up to 1,50,000. Now, what are the investments eligible for 80C? Let's see. What are the investments eligible for 80C? So eligible for 80C, if we see the investment, you will see the public provident fund, equity link, saving scheme, income tax, tax saving fixed deposits, then ULIP, unit link insurance plan, then senior citizen saving scheme, then your Sukanya, Samriddhi Yojana, then national saving certificate, national pensions systems, EPF, employees provident fund, public provident fund. So these are the basically the area. If you invest, then you are entitled to get the deduction under 80C. The deduction under 80C is maximum 1,50,000. But if you make some investment in national pension systems, then you are entitled to get the additional deduction of 50,000. So if you make deposits in national pension system NPS 50,000, and you have made deposits in public provident fund 1,50,000. So your total deductions under section 80C will be 2 lakhs, not 1,50,000, because you have invested in national pension systems. So after 80C, the next deduction is section 80D. 80D is nothing but your medical insurance premium. So this medical insurance premium, you can make, you can take that policy either for yourselves and family or for your dependent parents. So here the criteria is that if your age is your age is less than 60 years, that means if you are not a senior citizen, then you are entitled to get the deduction of 25,000. But if you make a policy for your parents who are basically above 60 years, that means senior citizens, then you can get the deduction up to 50,000 since your parents are senior citizens. So if you are a senior citizen, then you are entitled to get the deduction of 50,000. So apart from this mediclaim insurance, you are also getting some additional deduction, that is 5,000, that is in respect of your preventive health checkup. So preventive health checkup means that when you go to the doctor, pathological test of your ECG, blood sugar, blood cholesterol, for that, whatever the amount you have spent annually, you are entitled to get additional deductions of 5,000 under the section 80D. So we have got the deduction under section 80C, which is 1,50,000. If you make investment in national pension systems, then it will be 50,000 extra. And for medical insurance premium 80D, if you are not a senior citizen, then 25,000. If you are a senior citizen or if your parent is senior citizens, then you are entitled to 50,000 deductions. Next is that 80G. What is the donation? So what is the donations and how much you are entitled to get that things? So if we see the 80G deductions, then you will see that your deduction on for donations under section 80G can be classified into two categories. One is that without any maximum limit, and second is that subject to maximum limit of 10% of adjusted gross total income. Now first we have to find it that deduction. So before deduction we need to know what is the qualifying amount. So first we have to see the what is the qualifying amount for deduction, then we will find that eligible donation. So what is the qualifying amount? Qualifying amount means that if you make the donation, everywhere you are not entitled to get the deductions. So these are the certain area you will find list. Suppose National Cultural Fund. So this is basically your donation which qualify for ATG deductions. If you donate in National Cultural Fund, if your amount, if you donated 15,000, if you donated 15,000, then you are eligible how much? 100% you will be eligible. So your deduction, you will be eligible deduction under ATG is 15,000. So similarly, if you see that eligibility, some is 100%, some is 50%, right? So that is why they say that your deductions under section 80G without maximum limit, you will get the 100% donations or 50% deductions, and which is restricted to 10% of your adjusted gross total income, there also you are entitled to get a deduction under 100% or 50%. So which one is the 100%, which one is the 50%? That depends upon the nature of the scheme. Just like here we have seen the Rajiv Gandhi Foundation, here eligibility is the 50% is the deduction available. Whereas your National Defence Fund, the deduction eligible is the 100%. Now we need to know that what is the meaning of your adjusted gross total income. We know the gross total income that we have seen. This is the our gross total income. So this is the gross total income. Now what is the adjusted gross total income, which I know the AGTI. Adjusted gross total income, we have to start with the gross total income. So what is gross total income? Gross total income is that we have already arrived at. From that gross total income, we have to give the deduction of every items under chapter 6A except ATG. Then we have to give the deductions under any exempt income if it is there. Then short term capital gain, then long term capital gain, then other income 115 AB etc. We'll get the gross adjusted total income. So the restricted deductions under 80G, some schemes they said that it will be restricted up to limit of 10% of adjusted gross total income. So now we have got the idea that how to get the deduction, how to compute the deductions under chapter 6A. Then we will arrive at the total income, and on this total income we will apply the tax rate to arrive at our total tax liability. So this is our total study for today. Thank you.